Well, it was a rough day for Tesla and actually for the market as a whole. Even NVIDIA was down strongly today, but not quite as strongly as Tesla. And I've got the perfect person to help uncover maybe some of the reasons why. But later on in the conversation, we're going to talk about the financial impact of Robotaxi on Tesla and on individuals. And then at the very end, after I dismiss Bradford, I'm going to go a little deeper than usual on the numbers and why oil and gas, natural gas and such, why there's so much activity right now. All right. So Bradford, what the heck, man? Was it because a semi-truck was burned to the ground up there near Lake?
On I-80?
Was that why we went down 10.5 today?
I don't think so. The market as a whole was down. We do have Jay Powell coming out soon. There's been some negative news from the Fed that have come out. They're talking about 5% unemployment. It may be more macro worries.
Hey, back up. I didn't hear about the 5% unemployment. What was that? I missed that one.
I think there's a Fed president called Harker, and is talking about that unemployment could go up to 5%. He didn't say like next month, but
yeah.
that I could get there. So I think they're increasingly concerned or monitoring the job situation in the U.S.
Okay, well, we could imagine, of course, that there was some profit taking after a good run up, and that could be true for the macro as well, because there's been a very good run up the last couple of weeks since the Japan carry trade problem. So that undoubtedly was part of it. I was thinking the Cathie Woods also had a really bad day today. And a lot of times when those go down, it's because of the bond market going, the interest rates going up. And today they went up sharply. And I was trying to figure out, why would the bond yields be going up sharply today when we got the Fed speak tomorrow? And so you would think they'd be going down, or at least neutral, unless the bond market's worried that the Fed is not going to confirm the 25% basis point drop.
Yeah, I don't know why the market would suddenly be worried about it. We did have like some good news, but it really wasn't like over the past couple of weeks. But I don't think it's really enough to offset the bad news that's coming in. We seem to be headed toward recession. Maybe part of it is a realization that when the Fed starts lowering rates, there's times in the past when that has begun that the market has sold off then. Like that's precipitated a drop in the market. So I remember in the fall of 2007, Jim Cramer flipped out about the Fed, and the Fed started lowering rates in 2007. And he said they know nothing, all this stuff. And I remember I bought for clients, this past performance is no guarantee of future results, but I bought a 5% CD that was a 3-year CD. And I intentionally bought that for many clients, and to lock in that good CD rate for 3 years, we thought was really good. But but the market peaked out in October of 2007.
Yeah. So that was a good buy. That was a good decision. For sure. All right. So those are some of the things that happened today. We had an executive lead, but she was like an assistant, a highly placed executive assistant, but she wasn't the CFO, who left and was very complimentary, except saying it was a stressful workplace. But then guess what? That was a known fact. So I don't think that was any part of it. We had the fire again. Let's go back to the fire of the Tesla Semi. That was probably the thing that was the most obvious and repeated part of the conversation. And we know that when a fire does happen, they do burn for a long time.
Mhm.
But there's been quite a bit of information now for a long time. I would think that even halfway savvy investors know that there's rarely these fires related to electric vehicles. Do you think the semi fire had anything to do with today's action?
Not really. Yeah, so the media coverage for it was pretty intense. And I think the semi was in the ditch, if I'm remembering the video well, and it did burn for a long time. It does have a lot of batteries, so it has like,
Yeah, yeah,
I think maybe 10 times the amount of batteries as a Model 3 and 8 times as a Model Y. It's got a ton of batteries.
yeah.
And once they start, it's really hard to put out that fire. And the semi is really big, so it's not
Mhm.
like they were ready to hoist it into some kind of vat, that would put out the fire or put it on ice or anything like that.
Yeah, yeah. So yeah. So obviously, these different fire departments need to make sure that they have the kind of fire uh, uh, suppression equipment that they need, for electric vehicles, because it's obviously the future. Okay, so here was my theory, and it's a really bad theory.
Okay.
The subject matter that we're going to cover next, the Uber Cruise
Mhm.
partnership. That news broke after hours, and I double checked and triple checked, and I could not find any news coming out before the market closed.
Yeah.
But that is the kind of thing where I'm suspicious that it got out ahead of time. And so I'm thinking that might have been the reason. And even that, I don't think was a good reason. But aside from the fact that it might have been part of why the stock was down so much today, the truth of the matter is the stock is up in after hours. So
Wow.
if it did only pop after the market closed, then it obviously was not implicated. So what did you think about the announcement? Let's talk about the announcement of Uber wanting to get into bed with Cruise with regard to their future automated ride hail service.
Yeah, I feel like Uber didn't get the memo on how bad Uber was.
How bad Cruise was.
How bad Cruise was, yeah.
Right.
Uber's CEO essentially, I think, needed to quit. They essentially lied to regulators, as far as I'm aware, allegedly.
Again,
They
again, you're saying Cruise had,
Cruise did,
yeah,
yeah.
right.
And they told regulators in California that their interventions or disengagements were very rare, like extremely rare, like more than once every, I don't know, 4,000 miles or something like that. But it turned out that every 2.5 miles, they were intervening or disengaging to help the car out. So they basically had these remote drivers that were helping the cars. Um, and this is the case for a lot of Chinese startups as well
Yes,
with autonomy is, we don't know who's really driving the car. And we've
right.
seen shots where they have like, tons of these setups where it's got a steering wheel and a video screen and they can drive the car remotely. Um, so that was a really bad situation. And I feel like, maybe I'd say most damning would be that Uber knew that and still decided to make this agreement.
Yeah, they
Um,
have to
but,
know it.
but like it was out there. It was on X. Maybe the rest of mainstream media didn't cover it because it's not Tesla. But I don't think this is a good partner for Uber. I think it's a great partner for Cruise because it gives them some credibility.
But
Yeah.
Mary Barra doesn't have a very good record of choosing partners.
Well, she doesn't, but Uber gives them a lot more credibility.
So now let's look at Uber first. Let's take a look at Uber. Uber's has the largest loss, net total loss, cash loss of any company in U.S. corporate history at $30 billion. That's what they've lost so far since they started in business, before they started turning a profit, and the profit is measly. So that would be part one of the Uber story. Good part of the story is, of course, they've become a brand. They become a known thing. But and my experience with them has been fine in terms of using them all over the world. Okay, number two is that the Uber CEO has been selling his stock hand over fist. We're not talking about like 10 shares or 1,000 shares, like 1,000,000 shares, and then another 150,000 shares, and holy mackerel. So if you are already a company that's not doing that well, and your CEO is selling his shares hand over fist in advance of Tesla bringing out Robotaxi, what would be the advantage then to Cruise to being to picking yet another loser for a partner?
So Tesla bulls are pretty dismissive of the software chops that Uber has.
Okay.
So I think bulls are making the mistake that legacy auto bulls or apologists made, where they said, well, anytime legacy auto wants to make a great EV, they can just snap their fingers and do it. But once Toyota tried to make an EV, it had wompy wheels, like the wheels fell off.
Right, yes.
That should be inexcusable for Toyota.
Right.
Ford made the Mach-E, and they had issues with the windshield flying off, like literally flying off.
Yeah.
And those were issues that Tesla had that they didn't learn from.
Right.
So Uber has like 10 years in figuring out software for rideshare. There's a whole lot to the logistics, scaling up the whole, all the transfers that happen of information. I think there's a significant value to that, and Tesla and we might be underestimating, that learning curve that Tesla will have to go through if Tesla doesn't have some kind of little partnership as well.
So would Tesla, I mean, obviously, Google has been, building out their system apparently well. They're up to 100,000 rides a week, doubling their recent rides. They've just gone into 2 new territories and seemingly not having problems. If it is somewhat sophisticated, do you think, a quick check to Lyft for $1 billion might, or $500 million might cause Lyft to give up their entire software suite?
I don't think that'd be enough, but
really, because they're only worth, isn't Lyft only worth about $7 billion total?
Oh, I didn't know that. So that $1 billion to Lyft would be that it'd be a deal for Tesla, and if Lyft's market cap is only 7 billion, then that'd be a lifeline for sure.
Yeah. So I was in your camp. In fact, you and I might have even talked about this a few weeks ago, is that I was like, Tesla should, they should get into a partnership with Uber. And it kind of looked like they might, because there was this new, bromance, on X between Elon and the CEO, or no, the
former CEO,
former CEO, the founder, I guess. And then everybody, like you said, everybody else is like, no, Randy, Larry, no, Randy, you don't need to do that, So it'll be interesting.
I think Lyft is a better idea because they're just much smaller. Yeah. Uber is scared. They had an investor day in January of 2022, and Matt Smith and I were putting out a video about Robotaxi tomorrow at 4 p.m. That'll be on the Rebellionaire channel, and we talk about this, but they studied the cost for a ride, the cost to the rider, and they looked at $2 per mile versus $1 a mile. And right now Uber and Lyft are both $2 a mile or more even not in busy time.
Yeah.
What they found was that demand was 25 times higher at $1 a mile.
25
And
times.
Uber specifically linked this to autonomy because drivers are a big portion of the cost
Yeah.
of Uber ride.
Sure.
So I think they're scared. They're looking to partner up with autonomous companies.
And maybe they had approached Elon and he said no. I mean, maybe he said,
Yeah.
look, not a chance. We don't want a third party involved.
Yeah,
Anything possible.
and they could just be investigating it. I'm curious to learn about it. I think Cruise is more of a zero. I don't think their solution scales. I think there's big problems with it. But maybe Uber can learn something from Cruise. Cruise will certainly learn something from Uber if they get access to
Yeah. Yeah.
data.
Yeah.
I think there's a ton of data they could be
Yeah.
selling.
Yeah, it's possible. So I was remarking the other day on one of the programs that the success actually of Waymo, and you'd have to call it a success, even if we don't know if there's profit involved, but you'd have to call what they've done so far to be a good success, that bodes very well for Tesla, because if they can get up to 100,000 rides a week over several, well, it's been a year or so, but now they're ramping, I mean, doubling in the last month or quarter,
Yeah.
last month, from 500,000, from 50,000 to 100,000 rides a week. That would suggest, and your 25 times number, both of those suggest that the market is what we've been saying it is when Tesla finally gets the package put together.
It's a rather large market. Back in
Rather
2021,
large market.
yeah, back in 2021, Uber was doing 26 million rides per week. And they estimated that the private car number of rides per week is 6.6 billion.
Right.
I don't know if that was globally or in the
US.
US.
Yeah.
But that public transportation was 180 million
Wow.
rides per week in the US. It's a very big market.
Very
And
big market.
yeah, and Tesla would just be scratching the surface, as they start. And they could offer rides at $2 a mile, and it would instantly be competitive with Uber or Lyft. You wouldn't feel pressure to tip the driver because
Yes.
there's
Yes.
no human
Okay.
driver that
Yeah.
you feel sorry for or anything.
You
And
don't.
I think Tesla could make it extra easy by paying for the insurance.
Yeah.
We estimate that insurance is about 10 cents a mile for human drivers in the US. That's just a very rough thing based off like $100 a month insurance rate.
Mhm.
Um, and if they're paying 10 cents a mile, and Tesla's charging the rider $2 a mile and their take is 60 cents, then Tesla's still getting 50-cent profit per mile from Tesla owners lending their cars to a
Right.
Robotaxi network.
Right. And you'd expect, I assume, like everybody else's analysis, you would expect that number to drop at some point, probably to maybe on the order of 50 cents a mile, which is less than people pay to drive their own car around town. Is that kind of how you see it playing out over years?
Yeah, the IRS rate now is above 60 cents a mile, I
Right.
believe.
Yes.
And it would still be profitable to run a Robotaxi at 50 cents a mile. We estimate the cost to be around 29 cents a mile.
Around 29. Okay.
Yeah. I think when people are saying that the cost to own a Tesla, like a Model 3, when they're saying it's, above 50 cents a mile, they're lowballing how long that Model 3 is going to live.
Yeah. Yeah.
that the lifetime of the vehicle is very important in
Right,
calculating that.
right, right. Yeah. I mean, if you've ever driven old cars, which I have, yeah, some things start to go, but for the most part, you can replace them. And the biggest thing usually is kind of the smell. And
Yeah.
as you get older and older, but I think that's a factor of actually years, not miles driven, is the smell. I could be wrong, but I think that's mostly it. But again, upholstery is cheap. I mean, taking the
Yeah.
entire chair out and putting a new chair in. I think driving them for 500,000 miles, 600,000 miles shouldn't really be an issue. I think that, based on my experience anyway.
Yeah, you could replace the seat cushions.
Right.
Allegedly those, wear out or smell by 250,000 miles or something like that. So that's not that big of a deal
Yeah,
to
you should
replace
only let
those.
people that don't smell in the car. Uh, in other news today, because it is political season and it's just dumb not to talk about politics a little bit because it impacts, it impacts everything. It impacts the
Mhm.
economy. And people have been talking about the Trump bump because the theory is out there that Trump is good for the economy, that he'll lower regulations, lower taxes, et cetera, et cetera. The Harris Group has come in already and talked about raising taxes at corporate level, at personal, high worth individual level, at capital gains level. All of those would be not so good for commerce. So now people are talking about the Harris. So we have the Trump bump. Now we're talking about the Harris dump. And so there's some conversation around whether some of the market sell-off today could have been people wondering whether, in fact, Harris might have a shot. Now, the betting markets have all but one have completely switched back to Trump again as winning the thing, and the one is an outlier, which is a very unique kind of betting deal. But all the rest of them are 2 to 5 points up on Trump. Do you think that the convention bounce that Trump has got, which is the opposite of what you expect during this week, is something that continues? And if it goes high enough, we get the market bounce back again? What do you think?
Yeah. So I haven't been impressed with a good number of the speakers for both conventions, to be fair. Uh, Political season, I'm not a huge fan of. Chris Cuomo had a really good clip where he talked about how Democrats are bad mouthing the rich right now,
Yeah.
and they're elect
Rich Democrats are about the rich.
they're they're energizing their base. Um, People are skeptical that they're actually going to go through with these huge tax increases,
Mhm.
because and this was on the White House website, so a 25% tax on unrealized gains
Right.
for people who have more than 100 million in net worth.
Right.
That would be, in my opinion, that would be a disaster economically. You're basically forcing the largest holders of stock to sell and take immediately taking their gains, and they wouldn't be able to buy it back. They'd probably be able to buy back about 33 to 50% of their stock. Like they wouldn't even be able to buy, I mean,
Yeah.
they'd be able to buy back half to like 2/3 of their stock.
Right.
They wouldn't be able to buy back 75%. It's just like the mechanics of it, because
Yeah.
like they would be forced to sell more than 25% to raise the cash, because they have capital gains on each incremental share that they sell. So it'd be a real huge mess. And then you'd have this supply of shares that are on the market that need to get soaked up over time. And it would not be a positive.
There'd be an inclination, I think, for people to sell on December 30th to capture their actual, to get their actual gains as opposed to paying something that they don't have the cash to pay for.
Yeah.
Yeah. So
I don't think this would pass and become law because it would be very negative. A huge supply of shares on the market would not be good. So I think it's talk to energize the base. And the point that Chris Cuomo made was that the suites, all around the top of the basketball arena at both conventions, and those are, sold at $500,000 for the week. And, it's not mom and pop people that are up in those suites. It's the corporations, it's the big corporations. And it's the wealthy donors as well.
Yeah, well, Bernie Sanders is worth 3 million, and Pocahontas. I'm sorry, did I say Pocahontas? Elizabeth Warren is worth $18 million, and these folks are poking at the wealthy. I'm not worth 18 million. You might be, but I'm not. So I guess she's fighting for me. But back to the original question, I'm really as interested as I am in politics, and I am a political animal. I'm really more interested in the impact on the markets. Do you think that the people that are saying, and I would say, I don't see anybody saying anything else. Maybe there are, is that Trump.
I think there's some concern that in the market that Harris will be the next president, and that people are viewing that as negative for the economy and or corporate profits. I can see that. And my view is that they'll just kind of do what people want them to do if they're president.
Yeah.
Okay. So I don't feel like it's going to be something that would really be a negative in truth.
Okay. All
I think we're heading for a recession anyways, right? So like,
right.
That's not a fault of Harris or Trump.
Yeah, so to speak, it's theoretically not a fault of Harris. Although, as somebody asked me,
they'll take the blame or credit, right?
Well, somebody asked me the other day, well, Harris doesn't have anything to do with the economy. I say, as last time I checked, she has the tie-breaking vote in the Senate, and it's been used more under Biden than ever in history. We've had
Wow.
more, and she's broken more ties than ever in history. So there's a pretty big, powerful position that she has in that role. Let me back up really quick back to your video that's coming out this weekend again, though, or coming out tomorrow, rather, 4 o'clock. Do you end up being in the Cathie Wood, realm in terms of stock valuation in the 20s? I mean, it was 2000s, rather, $2,600, $2,700 without Optimus?
I'd say no, but we do show how valuable it can be, and we show it in like big blocks. So for every 100,000 robotaxis, for every 500,000 existing sexy cars in the Tesla lineup that are privately owned that join the fleet in a big way, we provide those unit economics.
And how do you come out on the question of whether Tesla will actually sell cyber cars or cyber taxis to consumers or fleets, or will they own all of those themselves?
They're best off owning them themselves if they can wrap their arms around all the logistics. And I mean, it would be a massive undertaking. Because like Uber's having Uber and Lyft are having the drivers, handle all the vehicles and all the
Right,
maintenance and
right,
cleaning. So
right.
for Tesla to run some of their own would be a massive undertaking, but there's just so much profit they would potentially be giving up that I don't think that Tesla would sell the Robotaxi for a while.
Okay, all right. So
They
you,
might kind of in the medium term or as we reach saturation, they might do that.
it seemed to me that, people talk about peak time and whatnot, although again, it seems as if uh, the Waymo folks have not had this issue of peak time. They've been able to go into markets and not have customers complaining because they don't have enough, or, worrying about how many that are sitting idle. But it seemed to me if there was a peak time issue, that Tesla could be kind of solving that by having their own fleet that kind of covers those issues, while the Airbnb portion of the fleet would be probably not as available during some of those peak times because you need your car at that very time. What does that sound like to you?
We think some early adopters are going to put their cars in right away. They're going to experiment with it, and there's a lot of households of Tesla owners that are multi-Tesla households. So I can see people loaning one of their cars out. But I'd say the bigger reason is there's a lot of people who haven't made $1 million on Tesla, and the amount of money they would receive for running their car would be rather substantial. It'd be nothing to sneeze at. It could be something like $100 a day, or 50 to $100 a day, something like that. So, and that's in profit, above wear and tear.
Right. So,
Um,
okay. So I think you know this about me. I'm an entrepreneur. I've started over 40 companies.
mhm,
Among those companies, I did a rental car company when I was in my early 20s. I have rented my cars on Turo. I have done Airbnb in a significant way.
mhm,
So I look at this from the very day it was announced, and I go, if I was a lot younger, I'd be buying 10 cars.
mhm,
right now, I'd be out on the used car market, snapping up some of these low cost Model 3s and maybe Model Ys. Aren't there like 100 million guys? Well, okay, 100 million is a lot. Aren't there a million guys like me out there who are always looking for that next opportunity, who see this thing where you're maybe spending $25,000 to get a used Model 3 at the most, maybe less,
mhm.
and you can turn around and make $20,000, $20,000, $30,000 a year off of it? I mean, how dumb do you have to be not to want that?
Yeah, ultimately, we think that the um, Tesla, once this is good and it's solid and all this, like the value of each Tesla should go up, because many of them will be run as robotaxis. Um, our value in the video was that like a Model 3 with FSD today is worth $70,000 more than it is new if Robotaxi started
Right.
today.
Right.
So this would argue for higher margins for the existing auto business for
Yes.
Tesla.
Yes.
So we're pretty excited about it. What part of your question did I not address
Well, I
though?
think I think you got it, because I've been throwing this out for a week. I'm not sure you and I have ever talked about it, but it seems to me that there's going to be a moment in time, because I know a lot of entrepreneurs. I think I had a consulting. I still have a consulting business. I only have 3 clients left in my consulting
Mhm.
business by choice, but I've consulted with 400 small business owners over the last 16 years, and I know small business owners pretty well. And it's hard for me not to imagine that there's going to be a day, whether it's 10-10, whether it's the day when Elon says you can drive it from the back seat, or whether it's actually the day he says, okay, you can push the button on your app and send your car out to work. Uh,
Mhm.
somewhere in between those 3 times, there's going to be a bunch of people like me that are going to go, I'm going to go get me a few used Teslas right now, because before the price goes up.
I don't think it'll happen, but how crazy would it be if that happened on 1010?
Yeah, no kidding.
That'd be
I
pretty
know
nuts.
I would have. 10 years, if I'm 10 years younger, I promise you, on 1010, if not before, maybe even now, I would already have, I would have them out on Turo. I would have already bought the vehicles. I would have them out working on Turo, waiting for the day when Robotaxi happens. That would be me 10 years ago.
Well, it's tempting. You do some of the math. It is tempting. But yeah, I wonder what's the better investment, running one of these, or owning the stock.
Yeah, okay, owning the stock, yeah, you could make the point, but sometimes you like to have, your,
There's definitely personality types that would like to have the physical thing. Like people
yeah,
like to have property, they like to have real estate because it's real,
yeah, and it's
on the
not just,
ground, all that.
yeah, but there's also, I think yeah, sure, you could say, okay, it's going to be such a big deal, I should just put all my money, but you can borrow money to buy that $25,000 Tesla.
Yeah.
So you can cover that. And I guarantee you, if you buy a $25,000 Tesla and put it on Turo right now, you're going to make money from day one.
Yeah.
And there's just no way you're not, because they're out there for $100 a day. So
Mhm.
you're only rented about a third of the time. You're going to easily pay all the expenses. So,
And I've heard that you can get up to like 10 auto loans as an individual.
yeah, before they even start questioning it. Yeah. And then you can maybe make a
I'm
different.
not saying that's a good idea. That's
Yeah,
just
yeah,
what
not
I've
investment
heard.
advice. But again, having started all these businesses and work with all these business owners, almost every other kind of business that you're in. I mean, my marketing consulting business was the easiest thing I've ever done. I still had 2 employees, at least at all times. Yes, most of the time they were in the Philippines and they were low cost, but still I had 2 full-time employees. I still had advertising expense. I still had promotion expense. I still had to find new clients. I had to go out and sell,
Mhm.
so when you're talking about this deal, you push a button on the app and the car goes.
Mhm. Yep.
This is an easy business. Anyway, I don't know. I'm just continuing to ask this question over and over, because it just seems to me that this might happen, and it might be a shocking change, an overnight change. Yeah.
And confusing us is Tesla's offering this deal now where if you already own FSD, you can buy like 3 years of supercharging and 3 years of premium connectivity for $2,000. So essentially, premium connectivity is about 300. That's about a $300 value. So they're giving you 3 years of unlimited supercharging for 1,700,
Yeah.
but you can't use it for commercial
I
purposes.
see. There you go. Yeah, there you go. That's the rub.
So you couldn't get multiple and run them on Turo or be a Uber Lyft driver or
Right,
whatever.
right.
I do wonder if they'll let you do it with a Robotaxi though.
But that would theoretically, that's still commercial. So it would,
But it's with Tesla, so maybe
yeah, maybe early adopters. I think actually the opposite to me, Elon, based on history, he's always said, I don't want the middleman to be making money off of these things. So if the price goes crazy, then he's going to raise the prices somehow,
right.
in order to not let the middleman, let some middleman come in and take advantage of the arbitrage.
Hmm. Yeah.
All right.
And we did a video about Cybertruck pricing and what they do
Yeah.
now that Foundation series may be winding down, and
Yeah.
it just came out this week that they're getting rid of the prohibition against reselling the Cybertruck.
Oh, they are. Okay.
Yeah.
Interesting. Okay. Well, that pretty much says that the time has come for the beginning of the next level down.
Mhm.
if they're getting rid of that. All right, interesting as heck. Well, thank you, Bradford. Unless you have anything else that's high on your list, I will let you go and we'll start talking about what the markets did today, what I think they're going to do tomorrow.
All right, let's hear about oil and natural gas too.
That's right. Okay, thanks a lot.
Bye.
Bye for now. All right, so what we've got going on here, and this is going to be a special, as I mentioned, this will be a little bit of a special day because I'm going to go a little deeper on some of this stuff. What we had today, as you may already know, is we had the Dow taking a dive 177 points, NASDAQ down 300, just call it 300, S&P down 50, Tesla down $12.61. Percentage-wise, that would be Dow down 0.43, NASDAQ down 1.67, S&P down 0.89, and you would have anticipated Tesla being down maybe 4%, based on the 1.67 from the NASDAQ, but instead it was down 5.65%. Something extra in the mix. Plus, the Tesla dive started earlier. It started right from the get-go. Could have been options. We never talk about the fact that sometimes this has a lot to do with options involvement. The Magnificent Seven was all down. So we had, I'm just going to run through some of these. Apple down 0.83, Google 1.28, Amazon down 2.21, Meta down 0.6, Microsoft down 2, and NVIDIA down 3.7% as they head into what's expected to be an earnings beat next week. They're down almost as much as Tesla today. The Cathie Woods, again, they were almost all down. I won't go through the whole list, but we're talking 5%, 4%. So, you know, they were down significantly. And then, as I mentioned, Tesla last check is up in the after hours about $1.30 because I have a percentage, 0.66%. How's that? Okay, let's go ahead and look at the bonds. Let's go ahead and look. This is where the shock is to me. This is one of the things I wanted to talk about in a little more depth. You've got the bonds right now. If the thing would give me the right number here, here we go. We have got, oh, for heaven's sakes. Let me try that again. So sorry. Well, okay, so the bonds are down 1.4 in the pre-market after being up significantly during the day. So we're back to 3.848. You have got the 2-year also about the same in the pre-market, I mean, just under 4%. So my question for today was, why would the bonds have jumped up? I think at one point it was 6 basis points, maybe even more during the day. Again, coming down off of that a little bit. And wouldn't that be an indication that at least the bond folks that are the people that know that market the most would be saying, well, maybe the Fed's not going to move after all. And if they don't move after all, that would be a huge, huge, big deal. So anyway, that's where we are with the bonds. Then we get to oil. Okay, so it turns out oil sitting at $73 in Texas Intermediate, 77 in Brent, unchanged in the pre-market. I mean, barely changed to unchanged, but up a little bit today. You remember I said yesterday or 2 days ago, I didn't think it could get much lower. It went lower for a day and bounced back. So far on that one, I get a little gold star so far because it could all change tomorrow. But that tended to also be a lot of the conversation that I heard as I did the research today, is that all three, oil, Brent, Texas Intermediate, and natural gas, all three right now, lots of inventory, lots of concern about China, lots of concern about the world economy, lots of concern about the U.S. economy. Looking at those unemployment numbers, looking at that 800,000 adjustment the other day, and thinking that there's just not a lot of potential for sucking up the inventory that's out there. Now you go back a year and you look at what OPEC did. At the time, we're going, man, OPEC's going to cut 2 million barrels a day. How in the world, what are they doing? And a lot of people thought, wow, that's going to really drive the price up over $100 again. But maybe OPEC knew some stuff that they weren't talking about. Certainly wasn't in their predictions either. So I'm not saying they did know. But the reality is they look really smart right now, because if they hadn't cut, the price might be a lot lower right now if they were pumping out another 2 million or 2% roughly of the daily world need. Natural gas in the same boat. While there was some hotter weather, and maybe that was driving the price up a few days ago, overall, there's lots of inventory, lots of productive capacity, and so people are not expecting natural gas to continue to go higher. You got gold up 480 in the pre-market after being down pretty substantially earlier. Last time I looked, around $30 down. We're sitting at 2,521. As talked about a couple of times on my show, what you have is central banks buying heavily into gold right now, and you've got consumers in China, South Korea, and the United States in particular buying in heavily into gold, and that is what's driving it. Now, at 25.21, we are not back to parity given inflation. If you use inflation, if you use the value of the dollar, we would have to get to 3,000 in order to be back to the all-time high. Silver down a little bit in the pre-market, 0.14. Copper down 0.24 in the pre-market. Both of those sitting fairly close to the mid-range of where they've been recently. The silver actually has been moving very little, so small, the movements in the silver. Dollar is down against the Japanese yen, but very little, 0.06, and up against the euro, again, very small, 0.045. Okay, so Bitcoin, which had jumped way up on the news of the Democrats saying, well, maybe we will look at the possibility of using some kind of a cryptocurrency in the future. We'll give it more gravitas. That jumped the numbers up for a few days, but man, it's getting pounded again, although still above 60 at 60,404. Okay, here come the futures. Man, holy mackerel. Oh, no, I'm sorry. Looked at the wrong thing. All right, here's the futures on equities. Dow up 44 or 0.11. S&P up 825 or 0.15. NASDAQ up 45 or 0.23. NASDAQ not doing too bad, getting some recovery from all the smacking it got today. Again, we talked about Tesla being up a little bit in that after hours trading. All right, so what are we going to get? Well, tomorrow, of course, we get the Jackson Hole speech. Everybody, I couldn't find anybody that doesn't expect the Fed chairman to give some kind of evidence that the cut is in, at least the 20. He's probably not going to give you any number, not going to say 25 basis points or 50 basis points. They're just looking for him to give more striking evidence that, in fact, it's going to happen. I would be shocked if he does that. I don't think he'll give any less evidence, but I would be shocked if he gives any more evidence. We're a week away from the PCE. We're 2 weeks away from the jobs number, ADP number. We've got more of these, weekly jobs numbers that are going to be coming. We've got lots more information on where the economy is headed. And quite frankly, the information in the last week or so for the services side has been excellent. And remember, out of the non-government part of the economy, services is 4-to-1 over the manufacturing and construction side of the economy. So when the services are doing great, even if the manufacturing and construction is not, that makes a big difference. And that could be what holds the economy together, never gives Randy the satisfaction. I don't want them to, well, I don't care if there's a recession or not, but I'm calling a recession, and it could be the services that keep us above that. Although we're starting to see some kind of drop in services, in particular in the travel, entertainment, all that kind of thing. We're seeing a drop. So we'll see what happens tomorrow. If he does give a more solid hint, obviously that's going to help the markets as well as the bond market. Bond yields going down, bond prices going up. If we see him not give anything or give anything that is more hawkish, that would be pretty disastrous. And then we wait for 3 weeks from yesterday for an actual decision by the Fed. I would expect a lot of volatility during that time, but I do expect Tesla, as I've mentioned before, again and again. I'm seeing today's action is a great buying point, a great opportunity to get in again. And then where will we be? 265 is still my number before 1010. All right, let me know in the comments below if you think I'm all wet, or you think I'm right, or something in between. How do you like this shirt? I know it's the same shirt. I haven't gotten any new ones recently. I'm sorry. And then hit Patreon if that is the way you want to ride. You want to help me a little bit to pay for this channel, to pay for those 2 employees down in the Philippines. That'd be great. Patreon down below. And then yeah, I think that's all I got for you right now. So it's been great talking to you.